All right, welcome back to the channel, Crypto Trend Trader, with the second installment of our Bitcoin technical analysis. Today we are learning how to do our Fibonacci internal and Fibonacci extension retracements and targets so that we can essentially use our Fib tool on various charts. Today we're looking at the Bitcoin chart once again on our monthly, and we're just picking up where we left off on the previous video. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. If you didn't check the first video out already, highly recommend you go back and do that, and you can draw your chart right along with us as we continue into some more advanced techniques. All right, so we have figured out our internal retracements. We have figured out our external or Fibonacci extension targets. And now what we want to do is look at this advanced pattern that we're paying attention to. So here we have initially what I'm paying attention to is we talked about how we had pushed up here to an initial high, and then we actually went slightly higher. Now, many people would redraw their chart how I have it here right now, but actually what we saw happening was what we suspected to be a little bit of an advanced pattern based on our Elliott wave trading. And if you're not familiar with Elliott wave trading, we're going to go ahead and take a look at that prior to getting any deeper into our Fibonacci targets. So the idea behind Elliott wave trading is that essentially you have a series of moves up, pullbacks or retracements, followed by another move up, a pullback or retracement, followed by another move up, and then again a pullback or retracement. And typically the way an Elliott wave pattern is drawn or shown, it's going to essentially give you, and I'm going to go ahead and just lighten these up so they're not quite as visible. We're not going to get rid of them or anything. We just want them to be a little less invasive as we draw in our Elliott wave cycles. And again, if you're not familiar with Elliott wave, there is basically a series of rules that basically give us potential moves to the upside, to the downside, etc. Now, Elliott wave is not going to affect 100% time. It's not going to always work, but when it does, it can be very, very effective. So again, we're going to look at our tools over here on the left. We're going to pick our Elliott impulse wave 1, 2, 3, 4, 5. And then we're going to go ahead and click on that one. And then we're going to start down here at basically 0. In this case, on this chart, it's $2. But if we drew it slightly lower at 0, it would be the same thing. So the first thing we're going to do is we're going to click right here to our first top right here, which was our initial move to the upside. And then that is our 1. And then we know the 2 is just the retracement of that move, or the percentage of that move that we give back before continuing to the upside. So here we have the first top is the 1, and then the 2 is our retracement. And then our next top is going to be our 3. And then the 4 actually is going to be our retracement of the 3. And then finally, we're going to put our 5 up here. And that is the completion of our Elliott wave 5-wave structure to the upside. And then typically what happens is we have an internal retracement of each of these waves. Initially, we see about a 30% retracement and then continuation. The second pullback, we see a 38.2% pullback and then continuation. And now what we're looking for is essentially how deep are we going to go. We know we've already come back down to the 382. It is possible we come deeper to the 0.5 or the 618. But after that, we would typically expect continuation. Now, that being said, we have actually done what I suspect is the completion of a 5-wave structure. And the important thing to note is when you retrace our initial 1 and we put in the 2, we're only retracing the 1. And then we put in our 3, and then we retrace the 3, and that's our 4, and we're only retracing the 3. And then finally, we're going to move up to our 5. And then once we top out, we initially retrace the 5, and then we actually retrace the entire 5-wave structure after that. So what we're looking for is the potential that not only are we going to retrace the 5, but we're actually going to retrace, in this case, Bitcoin's entire life cycle. So that being said, what we're looking at now, we're going to go ahead and draw on another macro fib. But before that, we want to actually pay attention to something else. You know what? We'll go ahead and put that fib in place here, but we're just going to ignore it for now. And then we're going to go back and take a look at what's happening here to the upside. And once again, I'm going to draw it to the initial peak right here, even though we go slightly higher after that. And I'll explain to you exactly why I'm doing that and how we were able to exactly nail the top and then this movement to the downside as well. So that being said, before we see our continuation here, I'm going to go ahead and switch the color of this one. So for our big macro fib, what we're going to do is we're going to go ahead and use we'll use the blue once again. Because it's not going to be relevant because we used that one first. And then I'm going to make that one slightly darker and we're going to turn it to a 2. So now here we can see we have these other Fibonacci's further out to the right here in blue. So we'll ignore them for a minute, and then we're going to talk about what's taking place right here. And we're actually going to go into a shorter time frame, and we're going to look at it on the weekly and try to get a clearer picture as to what's taking place right here. So here we put in that initial top right here, which is what I'm calling the 5, or the completion of the 5-wave structure. Now, if you're not familiar with Elliott wave and the rules, I highly recommend that you look those up. But the most important rules are basically that each of the waves is essentially going to have an internal retracement, and then when the completion of the 5th wave, we're going to retrace those 5 waves. But there's also rules for the actual waves themselves. And the most important thing, actually, we'll switch back to the daily for just one, or the monthly, I'm sorry, for just 1 minute. The most important thing to notice is, or pay attention to, is when we have our 1 and then we have the retrace, there's no initial rule specifically to how high the 1 goes or where it needs to go back to or how deep the retrace needs to be. But we want to look for a confluence with our Fibonacci levels, previous horizontal supports, etc. And then that being said, once we put in the top of the 1, what we're looking for next is the most important rules for Elliott wave are the wave 3 is often the longest, but it's never the shortest. So what we need to look at here is the length of the 1. And in this case, we basically go from $0 up to $1,218. So we want to make sure that our 3 is longer than the 1, so we can already presume the length of the 5. So if the 1 is longer than the 3, we know that the 5 cannot be longer than the 3, or else the 5 would be longer than the 3 and the 1 would be longer than the 3. And we know that our rule is that the wave 3 is often the longest, but never the shortest. So in this case, our wave 1 is about, $1,300. And then from the bottom of that pullback to $148, we actually go all the way up to $20,000. So this is much, much longer than the wave 1. So we don't have to worry about the distance of the wave 5. Now, if the 1 is longer than the 3, we know the 5 has to be shorter than the 3. If the 1 is shorter than the 3, then we know the 5 can either be shorter or longer than the 3, and it doesn't matter. And then also we know the next rule that we're paying attention to is once we put in our 1 and our retrace, and then our 3 and our retrace, the 4 cannot retrace within the peak of the 1 by more than a wick on a highly leveraged market on longer time frames. So in this case, you can use a daily, a weekly, a monthly, but the most important thing is when we retrace the 4, we do not want the 4 to come down below the 1. So at worst case scenario, the 4 could come down here and find support at the top of the 1, but it should not retrace deep inside of the zone by anything more than a wick. Now in this case, we don't have to worry about that because we had a bullish 382 retrace and then saw continuation. So that being said, we have our Elliott wave in place now. We look at our 5-wave structure, and now what we're paying attention to is not only are we going to be retracing the 1, and that's our 2, retracing the 3, and that's our 4, but we're looking for the retracement of the 5, and then potentially the retracement of the entire 5-wave structure. Because what often happens in Elliott wave is it trades very, very technically, and then once we complete a 5-wave structure, people are looking only for the retracement of our bottom of 4 to top of 5, and then what actually happens is we get a much deeper retracement, and people are caught upside down in positions, expecting price to find support and then go higher, and then it actually goes much, much lower. And typically that is when people lose hope in the asset, think something is wrong, something has changed, it has failed. But in all actuality, all we're doing is just having our complete retrace of the 5-wave structure. So that being said, now we're going to zoom in here. We're going to go back to our shorter time frame. In this case, we'll take a look at the weekly, and then we're just going to look at this topping pattern, and we're going to discuss how we are able to essentially see a complicated or less common pattern of correction, which is called an expanded flat Elliott wave correction. And we're actually able to identify this in advance and perfectly pick not only our top right here, but then we're able to take advantage of our bottom right here, ride it all the way back up to the top. Most people thought we were continuing to the upside because we put in a new all-time high, and then we failed shortly afterwards and then have been selling off violently since then. So a lot of people were caught unexpected and didn't realize what was going on, and many don't realize still what is going on. Only now are people in hindsight able to recognize what took place. So let's talk about our expanded Elliott wave flat correction. So again, we have certain rules that we need to follow. These rules, some of them are 100% necessity, or they invalidate what we're looking at, and other ones do not, and they're just more of a guideline. So the first and most important thing to take into account is there are many different ways that an Elliott wave can correct. And in this case, we're just looking at a very specific, very uncommon correction called the expanded flat Elliott wave correction. And the expanded flat Elliott wave correction, it takes place basically as some form of an internal correction similar to a flat, which is a regular, very common correction before a continuation of the predominant trend. Now, the difference in this case being that we're going to have actually our waves inside of the correction, sort of like under the microscope here. So in this case, what we're looking at is we're going to take up our tools right here again, and we're going to come down here, and what we're looking for is an ABC pattern, which is our Elliott wave correction, ABC. So we're going to click on that, and then again, we're going to pick our top, our macro high right here, and we have an initial wave down, retrace, A, and then we have a B, pushes back up here, and then we have a C that comes down here. So we see an A, we see a retracement of the A, but an internal retracement, and then we see a B, and then that is the end of our initial move to the downside. And then we're going to pull back up our same tool once again, and now we're going to go from the bottom here, and then we're looking for the same thing again. So we're going to have an A, a move to the upside in this case, then we're going to have a B, a pullback of that A, and then we're going to have a C back to our new all-time high. And I'm going to go ahead and switch this one to one of our brighter or cooler colors, in this case green. So red is a internal retracement to the downside, green is a retracement back to the upside, and then the final wave, what we're looking for is basically a 5-wave correction this time. And so we're going to pull up our Elliott impulse wave 1 through 5 again, just like we did for the macro trend. And now we're going to pick our top of this right here, and then we're going to go down 1, and then we're going to go up 2, and then we're going to go down 3, and then what we're looking for is a move back up 4, and then a move down 5. So because these haven't taken place yet, we don't know exactly where they're going to go to. All we can do is essentially just estimate. So I'm just going to put these on here for a little bit. But again, our rules are the same for this 5-wave structure, even though now it's a 5-wave structure to the downside. So once again, I'm going to switch the color on this, and we're going to color this one orange. So we have our initial move down. We have a retracement. In this case, we have a bearish move down. Then we have a bullish retracement, back up a percentage, and then we're going to come down, and we're going to put in our 3 after that. And then again, the same as before, we have put in what looks like the finish of our 3. We don't know yet for sure, but we know that when we come up on the 4 cannot retrace inside of the top of the 1 by more than a wick on a long time frame, especially in these highly leveraged markets. So the absolute maximum we should see a daily, weekly, or monthly close, if we start to move back to the upside now, is 36,000. Anything deeper than that, and we would be retracing inside of this, and we have to invalidate this and reassess our moves. Now, we're not always going to get that move. A lot of times we will actually see more confluence with various horizontal support levels or macro fib levels, etc. But now here we have essentially 3 waves down, then we have 3 waves up, then we're looking for 5 waves down. And the reason we're looking for this with an expanded Elliott wave flat correction is because that is one of the special rules that makes this such a unique pattern. So the main thing to pay attention to is on a normal correction, you're not going to take out the high. You're going to have an internal retracement and put in a high lower than your all-time high, and then you're going to continue to the downside. But one of the interesting rules for an Elliott wave flat correction is that the end of wave B will often travel past, or will travel past, the beginning of wave A, and the end of wave C will travel past the end of wave A. So what we need to look at once again is our macro correction that's taking place. So once again, I'm going to pull up the Elliott wave ABC pattern, and now we see that these initial 3 waves down, and then we see 3 waves up, and then we're looking for a potential 5 waves down. So what is that? This is our top right here. So the initial retracement is the A, and then the retracement back to the upside is the B, and then we're looking for our C. And again, we don't know where this is going to complete yet, so we're just going to kind of put it on there. But let's go ahead and switch this one to, we'll make this one pink. As a matter of fact, I'm going to make it just slightly darker so it stands out a little more, and then I'm going to make it a little bit bolder. So now we see we have an initial A down right here to completion. We have a B right here. And what were we talking about just a second ago? We said the only difference is the end of wave B will travel past the beginning of wave A. So the top of 5 or the beginning of wave A is at 64,000. We put in the A correction, and then we move up and the B travels past the beginning of wave A. And then after that, we start to form our C. And the next most important thing is that the end of wave C will travel past the end of wave A. So the end of wave A being here at 27,000, we know that our C is going to travel somewhere past that, which actually has already happened. So we actually came down below that. So anywhere from here, this has been validated and the expanded flat has been proven correct. Now, the next thing we're paying attention to and why we're looking for that 5 waves is most important here, because the main Elliott wave rule for the expanded flat is that the expanded flat correction pattern is subdivided into 3 separate portions. And we have a 3, a 3, and a 5 internal wave pattern. So here we have an A, a B, a C. So that is our 3. Then we have an A, a B, and C. That is our 3 once again. And then we have a 1, a 2, a 3, a 4 potentially, and then a 5. So this is still following textbook the expanded Elliott wave flat correction as we were able to identify before it took place, and we're still in the process of forming. So now let's look at our next rule for the expanded Elliott wave and try to pick out some targets and see how deep this retracement is likely to go. So the next rule is that wave C tends towards 162% of the length of wave A. So in this case, we have our wave A right here. So that's our wave A. So we know that our C tends towards the length of this plus 62%, or a 1.618 correction is the equivalence of 161.8, or if you round it off, 162. I'm sorry, 160, yeah, 162, sorry, said that correctly. So now let's take our fib tool once again, and now we're going to have to do something interesting for this, because we actually took out the high right here. Normally when we want to draw an extension, we would go from the high to the low, and that would extend our target to the upside, but we actually want to extend our target to the downside here. So we're going to start at the completion of A, and then we're going to go backwards towards our beginning of A. But in this case, actually, I'm going to extend the tool out to the side. So we're going to identify that top, but we're going to use the tool over to the right so we can see where our potential targets would be to the upside or to the downside accordingly. So I know this is getting very complicated, but this is very complex. And the reason it's so effective is because most people won't take the time or effort to actually learn how to do this. So, they're not going to actually, identify these targets in advance, and only looking through hindsight or seeing an advanced Elliott wave trader would they be able to recognize this. Now, that being said, now we have a 1.618, which is where we tend to retrace to, and that actually is going to give us a target for this slightly lower at 16,623. Now we see with our big sell-off that we recently had, we actually came down very close to that at 17,523. So is it possible that the move is already done? Yes. And it just slightly underperformed. It's also possible that we still have a little bit more downside, and we're just in the process of completing our 3 for now. So we're not sure exactly which one is taking place right now. We'll know very soon in the future, but the difference is not that much. The difference is between 17,500, where we went to already, and 16,700. So we're talking about just a couple of percent, not a big deal at all. So we have a potential target to the downside at that 162% for our length of wave A for the completion of wave C. Now, that being said, we'll look at our next rule, and the next rule is that the flat correction wave can appear in any corrective position. So that's fine. We can see continuation from here. We could see a deeper retrace. That's completely fine. No invalidation there. And then finally, a flat correction wave will usually target the 50% retracement level of the previous move. Okay, so now we're going to look back at our Fibonacci's, and we're going to go back to the bottom of our 4, and that is our Fibonacci in white right here, and we're going to look at where is our 50%. So from the bottom here at roughly 3,000 to our top of the 5 right here at roughly 64,000, we're looking for our 0.5 retracement in white. And the 0.5 retracement we have here in white is actually at $14,000. So now that we have a potential target for that, I'm just going to extend this out slightly to the side so we can see it just a little more clearly. And then we're going to go ahead and just place our 5 of the wave down. So now we have the ABC, and that makes up the A. And then we have the ABC, and that makes up the B. And then we have our 1, 2, 3, 4, 5, and that makes up our C. So that will be our potential target to the downside, and that's going to give us roughly a target of 14,250. Does not have to be perfect. We also don't know specifically, if we have bottomed out the 3 yet, and we won't know that actually until we take out the 236. So the same way that we were using Elliott wave on our macro timeframes, we can actually use an Elliott wave from the top of 2, which we know is already complete, and then we can go down to the bottom of 3, which we have potentially completed, and then we can look and see, okay, how close are we to finishing that? So I'm going to make this one in blue just because we don't have a blue one right here. But what we're looking for now is from the top right here to the bottom right here, the initial target of the 236 needs to get hit. So before we can validate this as a bottom and start really paying attention to our fib of our wave 3 of our correction of the C to the downside, we need to at least touch the 236, which is at 22,338. So we had an initial move up here and we got very close to it, but we did not technically validate this. So possibly at this point in time, we just need to push up slightly higher and validate it. And then we could see that continuation and we can look at these fib levels for the continuation. So we would see a shallow bullish retracement in the overall bearish trend would be our 382 right here at 25,857. We know our average retracement, or Charles Dow theory, would be 50% of the wave down. So we sell off from the top of the 2 or the beginning of the 3 to the bottom of what we suspect is the 3. And then we have a 50% move. So we give away a bunch and then we get back half of it and then we continue to the downside. Or arguably, we know that we could come all the way up to the 618 and that would actually be fine because that would just be touching the top or the bottom of the 1 in this case with the top of the 4. But anything deeper than that, and we would threaten the entire structure and invalidate our theory as to what's taking place. So essentially what we're looking at now is, and now we're looking into the future, we're predicting, the potential next move. We know that somewhere in between the 382, the 0.5, and the 618 would be a potential top. And we know that we have potentially either bottomed already or we may go actually slightly lower to the 1.618. So for today, we're just going to assume that we have put in the bottom right here and we're actually going to be trending towards this target. And then once we get to the top of the target, once we hit resistance, then we would expect resumption of our trend to the downside and probably the completion near our 0.5 of our 5th wave. So again, this is very complex. You may need to go back and listen to this. If you have any questions, feel free to leave them down below. We also have a private trade group where we go over advanced techniques. I post all kinds of useful charts, trade setups, and tools that you can use to become better at technical analysis. So that being said, now we have potential targets for what's taking place. Obviously, the chart is very busy right now, so I'm going to go ahead and just remove that internal retracement. You know what? We'll leave it on there. That's fine. We'll leave that on there. We have some targets to upside for this potential move. We know that we could come slightly lower. So maybe we already bottomed out right here. We were looking for somewhere in between the 1.5 and 1.618. So possibly we come slightly lower down there. But that is where we're actually looking to take a short-term counter trend trade for this bounce. And then once we get to our target to upside, we're looking to exit our position once again or enter into a short, assuming that we get continued downside target to our big target, which is that 14,174 level. So that is what we have so far. Obviously, we'll have to see what takes place over time. But when we look back at this and we see how busy this chart has gotten, and then we break it down, we take off our drawing tools and we see how many times this has beautifully traded technically at those exact levels, hit our targets, hit our internal retracements and our external Fibonacci extensions, and how we've been able to break down Bitcoin's life cycle essentially to like a very, very technical chart. So regardless of who is trading this, who is investing this, or who is making markets in this, whether it's whales, whether it's traditional money, whether it is, bots or algorithms programmed by coders, etc., we know that they are respecting and using the same technical analysis to not only have internal retracement targets, but external targets as well. So we're going to go ahead and wrap up this second portion of the video here, and then we're going to go into depth once again for potential best and worst case scenarios for either continuation to the upside after this retrace is completed, or potentially a deeper retrace, the type that really shakes people out and makes them lose faith in an asset, but also provides the absolute best buying opportunity ever in existence for an asset before going to new all-time highs. And the amount of gains potentially compared to the amount of losses are exponentially beneficial. So if you found any use in today's video, please make sure to like and subscribe. We do stream 3 times a day publicly, so you can, or 3 times a week rather, publicly, so highly recommend that you check out those live screens as you can interact with me. We do technical analysis on not only crypto and Bitcoin in real time, but also traditional stocks, commodities, and many other assets. Also take requests and answer questions live as well. So that being said, make sure to like and subscribe if you found value in today's video. Feel free to ask questions down in the comments section. If you're interested in joining the private group, you can reach out to me and find out the details. And that is going to be it for today's video. So remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.